Welcome to Stock Informer for you. The noise in the market is loud, but we prefer to let the data do the talking. If you've been tracking Indian banking stocks over the last year, one name keeps showing up on everyone's radar: Bank of Maharashtra. On paper, it looks like an absolute powerhouse. Just today, on July 10th, 2026, they dropped their Q1 FY27 results and the market went wild, sending the stock up nearly 3%. A massive 27% jump in net profit and some of the cleanest asset quality metrics in the entire public sector banking space. But here is the million-dollar question. Is this peak performance sustainable, or is there a hidden structural vulnerability lurking beneath the surface? Today, we are doing something completely unique. We are going to dedicate equal time to two crucial perspectives. First, we'll break down the phenomenal reality of their current financial health. Then, we are going to subject this balance sheet to a brutal, institutional-grade mathematical stress test, hypothesizing 10 extreme macroeconomic shocks. By the end of this video, you will see exactly what this stock is worth under a normal, behavioral, and worst-case scenario. Let's dive in. The present financial reality, the bull case. Let's start with the facts. Bank of Maharashtra just delivered an incredibly robust first quarter. Net profit jumped 26.8% year-on-year to cross the 2,000 crore mark, landing at exactly 2,020 crore rupees. Driven by an expansion in retail, agriculture, and MSME loans, their total gross advances grew a staggering 27.22% to hit 3,01,934 crore rupees. That is peer-leading growth in the banking industry. Meanwhile, net interest income, the core engine of any bank, scaled up 14.5% to reach 3,770 crore rupees. But the real crown jewel of this report is the asset quality. Look at these numbers. Gross NPA is sitting flat sequentially at a tiny 1.45%. Net NPA is virtually non-existent at just 0.13%. To back that up, their provision coverage ratio is at a bulletproof 98.55%. This means the bank has practically pre-funded almost all its potential bad loans. Add a spectacular return on assets of 1.90% and a capital adequacy ratio of 18.64%, and you have a bank that is well capitalized, highly profitable, and aggressively expanding. This is why the stock closed today at over 84 rupees per share. The 10-tier institutional stress test, the bear case. But a smart investor doesn't just buy the good times, they prepare for the worst. What happens if the macro environment turns hostile? We took this fresh balance sheet and subjected it to 10 severe cumulative economic shocks. Let's see how much pain Bank of Maharashtra can actually take. First, a macroeconomic downturn. If gross NPAs spike by 1.5 times, forcing provisions up, Q1 PAT takes an 864 crore rupees hit. Second, high for longer interest rates. If consumers aggressively migrate low-cost CASA deposits into high-yielding term deposits, squeezing the net interest margin by 45 basis points, net profit drops by another 177 crore rupees. Third, a sectoral meltdown. If we isolate their vulnerable MSME and commercial real estate books and apply a 20% default rate, a massive 2,676 crore rupees provisioning spike wipes out the quarter entirely, plunging the bank into a 709 crore rupees net loss. When you layer on our other tests, including a 25% wholesale deposit flight, a 120 basis point bond yield spike causing market-to-market losses on their investment book, and unsecured retail defaults, the compounding effect is severe. Let's look at the cumulative worst-case matrix. In a synchronized systemic crisis, the bank's quarterly profit evaporates into a 1,950 crore rupees net loss. Gross NPA surged to over 6%, and the critical common equity Tier 1 capital ratio degrades from a comfortable 15.56% down to 9.15%, dangerously approaching regulatory minimums. It proves that while the bank is safe today, its high loan growth makes it sensitive to sharp economic shifts. Price discovery and valuation models. Now, let's turn these scenarios into hard valuation metrics using a justified price-to-book model and earnings power multipliers. We apply a cost of equity of 13.5% and a long-term growth rate of 6% against the current book value. This gives us three distinct target paths for the stock. Scenario 1, the normal path. If the bank continues its current operational efficiency, maintaining a strong return on equity of 15.5%, the justified PB multiple is 1.27 times. This yields a steady fundamental target price range of 43 rupees and 80 paise to 64 rupees and 77 paise based on earnings. Scenario 2, the neuroeconomic path. This is the most realistic behavioral model. It assumes that, due to subtle inflation fears and conservative household spending in 2026, credit growth organically slows down and deposit costs remain sticky. This compresses the return on equity to 11.2%. The justified multiple drops to 0.69 times, giving us a target price of 23 rupees and 80 paise to 35 rupees and 95 paise. Scenario 3, the extreme stress path. If our macroeconomic shocks hit simultaneously, the bank's capital structure gets severely impaired. Return on equity drops toward 4.5%, collapsing the justified multiple to just 0.20 times. In this severe scenario, the stock's liquidation floor falls to between 6 rupees and 6 rupees and 90 paise, the investor's verdict. So, what is the ultimate verdict? By blending these three paths, giving 50% weight to the realistic behavioral model, 35% to the current stellar normal trajectory, and 15% to extreme stress, our blended target price for Bank of Maharashtra settles in a realistic band of 32 rupees to 38 rupees. At its current market price of around 84 rupees, the stock is trading at a premium, priced strictly for absolute perfection. The current financials prove management has executed brilliantly, but our stress testing shows that if the macro tide turns, the downside risk from current levels could be as high as 41% to a fair value repricing, and up to 88% in a black swan crisis. If you are a shareholder, celebrate the phenomenal Q1 results, but keep a very close eye on rising deposit costs and any signs of corporate or retail slippages in the coming quarters. What do you think? Is Bank of Maharashtra a buy at 84 rupees, or are you waiting for a correction? Let me know in the comments below. Hit that subscribe button for more deep dive bank stress tests, and I'll see you in the next video.